Hi, I'm Barat. Welcome to my screencast on petty cash. Firstly, let's get started with what petty cash actually is. According to ACC2 financial textbook, petty cash is an amount of cash kept on hand to pay for minor expenditures. So why do businesses keep petty cash funds? Petty cash is a good choice for small businesses and most effective way to purchase anything that's inexpensive. It is mostly used to purchase items outright for the business, or in some cases used to reimburse employee who spent his or her own money on something for the company. Petty cash operations will involve three activities: establishing the fund, making payments from the fund, replenishing the fund. Let's get started with step 1, establishing the fund. To establish a petty cash fund, a check is written for the amount of the fund. Cashing the check and placing the cash under the care of an employee, journal entry must be made for this transaction. For example, a petty cash worth $100 will look like this. Second step, making payments from the fund. After the fund is established, the cash is used to pay for qualifying expenditures. Payments are usually made in one of two ways. Cash can be taken from the fund to make a payment, or employees can seek reimbursement from the fund for payments they have personally made. No journal entries are to be recorded during this process. The final step is replenishing the fund. As the cash in the fund decreases, the fund must be replenished. To do so, the remaining cash in the fund is counted. To illustrate, suppose that on 31st May, the custodian examines the petty cash fund and prepares the following report. As a result, Barnett would cash a check for $85 to replenish the fund and record any expenses as follows. However, sometimes the custodian will not obtain all receipts or will give incorrect change, resulting in a discrepancy. In such cases, the discrepancy is charged to an account called cash over and short. Cash over and short is a temporary account that can have either a debit or credit balance, depending on the situation. To illustrate, assuming the fact from the previous event, custodians count only $13 of cash in the fund before replenishment. In this case, a check must be written for $87 to fully replenish the fund. However, there are only $85 of receipts, therefore leaving a $2 difference, which is then charged to a cash over and short account as follows. In this entry, cash over and short account is debited, which indicates an increase to expense. So this is how petty cash works. Thank you for listening.
Created using Powtoon.